Evergrande filing for bankruptcy, SpaceX supposedly selling its BTC holdings, largest liquidation event since FTX crash in November 22. Whatever the narrative, whatever the catalyst, it doesn't matter how to explain the move now that it's happened. Those who have read my tweets and watched these YouTube videos over the past few weeks know that there was a bearish divergence on price and the possibility of completing a double top. And in this video, we're going to be talking about an update to this bearish divergence. And we're also going to be talking about the update to the double top, what's going on with that. And we'll be talking about the measured move that we covered here in early August. So let's dive right in. Subscribe to the channel for more videos like this in the future. And let's go ahead and talk about everything. This is the bearish divergence that I mentioned earlier this month, August 2nd. And in these videos, recently we've been talking about the higher highs and the lower highs in the RSI. 29,250 was acting as a resistance, and we've seen 29,250 really just reject price, and we've seen the bearish divergence take play. It's gone into full effect. The thing about this bearish divergence is that it was feeding into a potential double top formation, which we're now seeing play out. If we measure this double top formation from the base and to the top of the double top and essentially just propagate it like this, we would come up with a measured move of to 20k essentially. And this is something I spoke about on August 6th. So now we're seeing the double top really take play. It's in play. We have to talk about how this weekly bearish divergence just played into this double top, effectively completing. So if we now breach and break down from 26k, because this is the validation point of this double top, and a double top takes the shape of an M-shaped formation. M for murder is the mantra, not a very pleasant one, but nonetheless a really important one, especially in these market conditions where losing 26k, the base of this double top, would enable a measured move of a drop to 22k. So what are some of the things that we need to watch out for in terms of confirming this loss of the double top? Because we haven't yet reached the bottom of this. And at the moment, we are seeing a higher low. And one of the things that could distort this higher low, or at least distort this double bottom, this double top, apologies, is to see a higher low play out. If this higher low continues to hold, then it might distort the double top. But until that happens, we really need to focus on this base, because if we see a weekly close below 26k followed by a rejection from 26k, then we'll probably see confirmed breakdown from this double top. And the reason I talk about a weekly close is because we've seen downside wicks. Like here, we've seen downside wicks below this 26k region before, and ultimately a weekly close above there is what staves Bitcoin away from dropping into lower levels. So at the moment, we're still above here, but a weekly close below here would set price up for further continuation towards the downside. And it's currently 16% towards 22k. So no need to talk about such low 20k regions until this base of the double top really gives way. That's really important to talk about, because we've seen a very strong downside. We've seen a strong crash, and it's really easy to get caught up in bearish euphoria where we just overextend our targets. Many people are going to be talking about back to 10k once again. It's very easy to get caught up in bearish euphoria in the same way that many got caught up in bearish or at least bullish euphoria on the flip side and got trapped in these FOMO wicks beyond that higher high resistance. So it's really important not to get trapped in these downside wicks that could potentially occur, but weekly candle close above the base of this double top. Weekly close below here, that's going to set up for further downside. And one of the things to talk about is that even if we break down from this double top, really is 22k going to get revisited? Because one of the major reasons and regions to really focus on is this inverse head and shoulders formation that we saw play out earlier this year. This left shoulder, head, and right shoulder break out, and we never really retested this neckline effectively of the inverse head and shoulders. We've never really retested this as a new support. So retesting this as a new support and holding there could potentially be a really bullish signal. And notice how this region is around 24K, so definitely above the measured move for a double top. But if this lapses, then 22K would be one of those next logical levels. But really important to note that this is a retest region that hasn't been tapped, and we're probably going to see a lot of liquidity there. Should we give way and see this double top breakdown? It's really important to reiterate, because it's really important to really easy just to think about this region straight away without this level giving way first. That's something that's really important to talk about. The weekly bearish divergence, we spoke about this in the context of August, because in August we tend to see a lot of drawdown, and in 2014 we saw 17% drawdown, 18% drawdown in 2015. So interesting how potentially an 18% drawdown would see us go to 24K, and that would be totally normal by standards of history for an August month. And one of the things to notice here is that these are the single double digit figures for an August month, so they're both 18%. And what's important here is that 2015 is a pre-halving year, and that's really crucial to mention because 2023 is a pre-halving year as well. Of course, at the same time, 2019 is a pre-halving year, but as we can see from this chart right over here, we've already seen 4% downside. That's essentially this is why I've marked these levels: 4% for a 2019 retrace and 18% for a 2015 retrace. And we've seen the 4% mark get cleared out totally because we've dropped 9%. And if we validate this double top, then rest assured we'll probably see that 18% 2015 like retrace fully just confirm and repeat history. But what I also want to talk about is that September tends to be a really difficult month for Bitcoin. We don't see much double digit downside. 2014 19% and 2019 13%, but generally we tend to see single digit either gains, although that's very on the lesser side of probability. We tend to see single digit gains more frequently and not too deep of those retracements. So we'll probably see a bit more downside in September and a generally slow month in September. And if things really do cascade, then maybe even some lower double digits. But at the moment, we're seeing a very strong red month for August. And if this double top gives way, then we'll probably see the lower 20K regions. And what I want to talk about as well in this video is that I spoke about how double tops are mirroring each other, or at least they're symmetrical formations. So this should mirror this essentially, or at least this should mirror this. And this was a 90-day channel, right? And now a mirroring and a symmetrical double top would assume that we'd see the double top complete by mid-September. And this is something I spoke about, I think, earlier this month, August 7th. And what we spoke about on August 7th, we need to say right now that 63 days. It took 63 days for this second half of the double top to complete, which is much shorter here than what we saw in the second part of this M-shaped double top formation. And what I really want to talk about right now is that we saw a step-by-step continuation to the downside in this first half of the double top. But what we're seeing right now is something arguably worse, because we're not seeing a step-by-step continuation. We're just seeing a crash and just slicing through those supports and resistances that were formed in this step-by-step process. So from this crash, we're essentially seeing that these supports and resistances aren't very strong. They're not really holding price action. It's not really translating into some sort of rebounding. So the buy side interest in those regions appears to be quite weak. And when we juxtapose that with volume, and only yesterday, in yesterday's video, August 17th, we spoke about how the bearish divergence formed on inclining volume, but the second part of this double top is forming on declining volume. And that's something to be potentially alarmed about, because we're still declining on volume, Granted, we saw maybe a small breakout in sell side volume most recently, but the way we have to talk about this sell side volume is that it's not really strong enough, even though not much sell side volume was able to instill such a strong sell side candle, which shows that bears don't need to put in too much effort on the sell side to prompt such a strong seller candle, which just shows that the bears are in control. But if we just talk about this seller candle in the context of previous reversal seller candles, for instance, this one, right? We saw a strong downside wick, strong seller volume to showcase seller exhaustion, people just selling so much and capitulating that they can't sell anymore, they can't drive price down anymore, and bulls are just really eager to step in, and any bull side pressure could easily reverse price because the bulls then take control, and not much bull side strength can move price towards the upside quite substantially. So this is seller exhaustion at its finest right over here. And even over here, when we saw this reversal, this was a strong seller exhaustion candle. Interestingly enough, very similar to here, to this reversal back in early 2023. And even on this seller candle, which is this dipping price action, this amount of seller volume has preceded reversals, whether this was a strong reversal, whether that was a dipping reversal, still the same seller volume here as well, reversal towards the upside. And so if we think about seller volume in that context, then we need to see seller volume at least get closer to this region for us to be comfortable in seller exhaustion happening and for this current strong seller candle reversing towards the upside. And at the moment, we're not really seeing that just yet. This seller volume is still very much strong. It's still showcasing that bears are still in control. Seller exhaustion isn't yet in there. We can still see some sort of bouncing, of course, but we don't have that strong seller volume to suggest that we're going to be running out of sell side pressure and reversing. That being said, this is Friday. We have a few days left until this weekly candle closes, so we could see seller volume pick up going into the end of the weekend and before the weekly close. But really important to watch out for how this volume shapes up in the coming days. How does this candle shape up in terms of this level? Because if it weekly closes below, that's quite bearish. If it closes above, it will be really interesting to see if we can reverse from here, coupled with that volume. Really interesting times ahead. That's about it for this video. Subscribe to the channel for more videos like this in the future. And of course, if you enjoyed this one, feel free to subscribe, but leave a like as well if you enjoyed this analysis. Really appreciate your support here on the channel. Really appreciate you tuning in. Thanks so much for watching. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.